Retailer Card Factory saw more than £193 million knocked off its value after issuing its second profit warning in 4 months. It had experienced increased pressure in its cards business, and its yearly earnings will be in the range of £93 million and £95 million as a result, a drop from £98.5 million a year before. The warning caused shares to plunge 20%, or 56.6p, to 225.8p. Card Factory, which specializes in greeting cards, wrapping paper and gifts, said the weak pound and higher wage costs had hurt its bottom line. It now expects to book an extra £7 million to £8 million in costs for the full year. The update followed a similar warning in September, when it said the rising minimum wage and the pound's fall hit earnings. Yesterday, it reported a 2.7% increase in sales in the 11 months to December 31, and a solid performance over Christmas. Sales from its website grew 3% in the 11 months, but trading on its personalized gift site was disappointing and broadly flat. The FTSE 100 finished at yet another record high, increasing by 0.2%, or 14.43 points, to close at 7,762.94. While the FTSE 250 closed down 0.1%, or 22.08 points, at 20,737.92 points. Takeaway firm Just Eat powered up the blue chip index, jumping 4.7%, or 36.2p, to 803.8p after an upgrade from Barclays. The bank said it expects Just Eat's sales to surpass £710 million this year thanks to the consolidation of Hungry House and the expansion of its logistics business. Anglo American also soared 3.6%, or 60.6p, to 1,761p after Morgan Stanley upgraded its rating and raised its target price for the stock to 1,900p from 1,600p. Barratt Developments fell 2.7%, or 17.2p, to 617p despite a steady half-year update as house builders remained out of favor. It sold 7,324 new homes in the first 6 months of the financial year, up 2% on the same period last year. Foxy Bingo owner GVC Holdings reported record annual revenues of £897 million ahead of its £4 billion takeover of Ladbrokes. Shares dipped 0.4%, or 3.5p, to 955p. Hayes was a big riser after strong demand across Europe helped lift it to double-digit growth. The FTSE 250 firm, which is Britain's biggest recruitment company, jumped 4.3%, or 8p, to 196.3p after it said fees were up 12% for the 3 months to December 31. It was largely thanks to its success in continental Europe, where fees grew 19%. Paul Venables, The company's chief financial officer said there was a boom for recruiters in Germany. He added, "It's our biggest business now, and we are the largest operator there as well." Hayes reported 10% growth in Asia, but in the UK fees rose just 1%. Meanwhile, a flurry of acquisitions sent outsourcing group Bunzl higher. The firm jumped 2.2%, or 45p, to 2050p, after snapping up catering equipment supplier Agora and the Californian workplace safety equipment manufacturer Revco. Bunzl did not disclose the terms of the deal, but said Agora generated £27 million worth of sales in the year to the end of March 2017, while Revco also generated £27 million in sales last year. It added that it expects to benefit from President Donald Trump's changes to tax rates. Booming Christmas sales failed to stop shoe firm foot Asylum slipping. It dropped 3.8%, or 9.5p, to 243.5p, as investors took profits off the back of its strong results. Sales rose 33.4% to £89.8 million in the 18 weeks to December 30, while its shares are up more than 22% since it listed on the London Stock Exchange in October.